This week, the global economy was rocked as China announced a staggering 500% tariff on a broad range of American goods. This is Beijing's direct response to escalating threats from President Trump's administration, which has been pushing for similar tariffs on Chinese products. The trade war, once about imbalances, has now become a tool in a much larger geopolitical struggle. The immediate trigger: U.S. Treasury Secretary Scott Bessent revealed that 85 senators support giving Trump the power to impose 500% tariffs on Chinese imports, citing China's purchases of Russian oil as funding for Russia's war. Beijing denies these claims, but the dispute now sits at the intersection of economics and global power politics. Trump's threats have escalated rapidly, from 100% tariffs to a possible 155% by November if a very fair deal isn't reached. China's move to match and even exceed these threats signals it won't bow to U.S. pressure, even at significant economic cost. This is as much a political statement as an economic one, projecting strength to both domestic and international audiences. China is betting that the pain inflicted on U.S. exporters will create political pressure in America to de-escalate. The stakes are enormous. The global trading system itself is being challenged. Nations worldwide are now forced to reconsider their economic dependencies and alliances. The era of predictable trade relations is over. The world is entering uncharted territory where established rules no longer apply. The next moves by Washington and Beijing will shape the future of global commerce. The world is watching, and the consequences will be felt everywhere. China's 500% tariffs hit hardest in America's heartland. Farmers exporting soybeans, pork, and other goods to China now face the loss of their biggest market overnight. High-tech manufacturers, from aerospace to machinery, will see their products priced out in China. The result? Looming bankruptcies, job losses, and financial distress across multiple U.S. sectors. For consumers, the pain is real. U.S. tariffs on Chinese goods have already raised prices on electronics, furniture, and more. As supply chains are disrupted, companies will be forced to find more expensive alternatives, fueling inflation and squeezing household budgets. The risk of recession grows as lost exports, disrupted supply chains, and falling consumer confidence converge. Untangling decades-old supply chains built around China is costly and slow, making reshoring manufacturing a daunting task. In the meantime, U.S. companies risk losing global market share to international competitors not caught in the crossfire. The trade war's ripple effects threaten the stability and competitiveness of the entire U.S. economy. China's strategy goes far beyond tariffs. Its massive energy purchases from Russia and Iran are central to its geopolitical play, reducing reliance on U.S.-controlled sea lanes and building alliances with sanctioned states. China's dominance in rare earth minerals, 70% of global production and 90% of processing, gives it a powerful lever. New export restrictions mean foreign firms need Beijing's approval to export products containing rare earths, tightening China's grip on global tech and defense supply chains. The U.S. is scrambling to build alternative supply chains, signing new mineral agreements with allies like Australia, but this will take years. China's control over energy and critical minerals allows it to absorb economic pain and pursue long-term geopolitical goals. The trade war is just one front in a generational struggle to reshape the global order. Beijing aims to secure resources, build a coalition of like-minded states, and challenge Western technological supremacy. The U.S. and its allies are left racing to reduce their vulnerabilities. The stakes are not just economic, they're about who sets the rules for the future. The world's technological and security landscape hangs in the balance. Despite the heated rhetoric, Washington and Beijing are still talking. Daily communication continues, as both sides know a total breakdown would be catastrophic. Temporary truces, like previous 90-day pauses, have bought time for negotiations, but the next major deadline looms in November 2025. U.S. officials hint that high tariffs could be delayed if China postpones its rare earth export restrictions. Upcoming summits, including a meeting between Trump and Xi at APEC, offer rare chances for breakthroughs. These face-to-face meetings are crucial, projecting leadership and sometimes yielding agreements to keep talking. The issues now go far beyond trade. National security, technology, and global influence are all on the table. Both sides demand concessions the other is unlikely to give, making a very fair deal elusive. The diplomatic dance continues, but the risk of a misstep grows with every round. The trade war has unleashed waves of volatility across global markets. Trump's tariff threats trigger massive sell-offs, from stocks to cryptocurrencies, billions wiped out in hours. Companies with deep China ties are hit hardest, and the VIX fear gauge keeps spiking. Commodity prices swing wildly, especially for goods like soybeans and rare earths, as supply chains are threatened. Investors flee to safe havens, but even the US dollar's strength is shadowed by recession fears. Every new threat erodes confidence in the global economic system. The rules-based order that underpinned decades of prosperity is cracking. The world's financial foundation is more fragile than ever. The US-China trade war is a global crisis, not just a bilateral spat. Washington is rallying allies in Europe and Asia to join its campaign against China, but many are caught in a bind. For countries like Germany, Japan, and South Korea, China is both a rival and a vital economic partner. Aligning too closely with the US risks Chinese retaliation, so most allies try to walk a fine line. The result? A fragmented international response, not the united front Washington wants. The conflict is forcing a fundamental rewiring of global supply chains. Companies are adopting a China plus one strategy, shifting some production to countries like Vietnam, Mexico, and India. This transition is costly and complex, raising prices and reducing efficiency in the short term. Some countries will benefit from new investment, but none can match China's scale and infrastructure. The world is moving toward a more fragmented, regionalized production system. The economic map is being redrawn with winners and losers still emerging. The US-China trade war is a turning point that will define the global order for decades. The immediate risk: a global recession triggered by tariffs, broken supply chains, and shaken investor confidence. The era of hyperglobalization is ending, replaced by great power competition and economic blocks. Nations now see interdependence as a vulnerability, prioritizing resilience and security over efficiency. The world is splitting into rival blocks, one led by the US and its allies, the other by China and its partners. Global institutions like the WTO are struggling to stay relevant as power politics take center stage. Regional and bilateral deals and friendshoring are replacing universal free trade. The outcome will depend on which system, open and democratic or state-led and strategic, proves more resilient and attractive. The choices made now will shape the world for generations to come.